One of New Zealand's biggest financial firms has collapsed after failing to meet a deadline to recapitalise the business. South Canterbury Finance had been in trouble for a while as a result of bad lending decisions made in the boom years. The government has now been forced to step in, and it will be New Zealand taxpayers who are forced to pay. Philippa McDonald reports.
It's the biggest finance company to collapse in New Zealand, and South Canterbury Finance had been a major source of funds for farmers.
Financiers such as South Canterbury Finance have enabled transactions to happen that in the future simply won't be able to happen, and it may well be that people have to exit the industry.
South Canterbury Finance had been an institution in the South Island city of Timaru, and investors had been waiting anxiously for news on whether a deal could be done which would bring the company back from the brink of receivership.
With this money involved, we want to know what's happened to it.
Pretty gutted and worried.
But New Zealand's Finance Minister Bill English was quick to contain the damage.
The depositors will get their $1.6 billion cash in their pockets over the next month.
The money will come from the New Zealand government's Deposit Guarantee Scheme, which was established at the height of the global financial crisis to ensure investor confidence.
Without that Deposit Guarantee Scheme, there would have been a run on these financial institutions and they would have gone broke. And that would have had a much more significant impact on the New Zealand economy.
The government's saying its bailout won't harm the economy and there's no risk to New Zealand's credit rating. But the opposition is alarmed at the initial price tag for the bailout, a staggering $1.6 billion.
The ordinary Kiwi that's struggling to save for him or herself, having to bail out the investors of South Canterbury will come as a huge burden.
The government insists it'll get most of the money back by selling the company's assets and that the final cost will be about $600 million.